Talk some trades with Scott Bauer, CEO of Prosper Trading Academy. Branching out from our stock conversation a little bit, but where there is some overlap, Scott, is the idea that maybe there are some bifurcated political trades in the market. We've kind of talked about the crypto side of it, which I've kind of sympathized as maybe the actual, one of the few actual like policy trades out there.
Yeah, it seems to be a policy trade, Oliver, but I think there's too much already baked in, though. What do I mean by that? If there's a Trump win, the thought process is that he's way more pro crypto, and analysts are saying we could see 85, 90,000 pretty immediately here. I'd be very, very cautious. On the flip side to that, with on the Harris side, not being as friendly to the crypto space and in the Biden regime, being more hawkish, continuation of that is the thought process that maybe we see Bitcoin down around the 50,000 area. Again, I think that's too severe. Now, going into the election here, I will tell you that Bitcoin is trading at one of its highest implied volatilities of all time. It's around 65%. What does that mean? That means at a 65% implied volatility, the marketplace is expecting at that volatility that Bitcoin could move as much as 65% of the current price over the next year. So that's a pretty big number. If we're just to round off Bitcoin to 70,000 or so, you're talking you could see a $43,000 move over the next year. Now, that's very unlikely to happen, but anything can happen. But the anticipation is a really, really big move over the next week or so.
That's where it really gets, pretty cut and dry as far as the technicals go, I think, for the crypto bulls, is whether or not they can break out of this long-term bearish divergence. Since the first time we got into the 60 handle back in 2021, momentum into there was screaming. And then later that year, as we pushed into 2022, we tried the mid-60s and momentum was a little lower. And then actually, even though we had a pretty big ETF run, this latest push was a little lower momentum too. So if we break out and get this big move that they're hoping for, that would end that series, because that would have to require some big momentum.
There's no question about it. And I don't see that happening, to be honest with you. I think you may see an initial euphoria. If one side wins, you may see an initial sell-off. If the other side wins here, I don't think we're going to see a massive move. If you were to ask me where we're going to be 3 weeks from now or 4 weeks from now, I'd say that 75 is still a pretty tough level to break on the upside, and 60 is probably a tough level to break on the downside.
Kind of a nasty little candle from last week on the weekly for Bitcoin, given that long wick, right? I'm not the expert on the charts. I'll have to ask one of our chart masters, but just shows how hard it faded. It's kind of a tough little range to get through now, to your point.
Oh, there's no question about it. You have more people watching it, than ever right now. And I would expect some really, really violent moves tomorrow night, Wednesday night. I mean, the longer, obviously, the election results get protracted out, the more this volatility is going to remain. But I think you might see some pretty big candles over the next couple of days.
Yeah. Maybe it's an inverted hammer, though. It's still technically a green candle, so I'm not sure if that's the definition. All right, so the possibility this thing could stay with the 7 handle might be a little bit frustrating for those looking for like a massive rip. But Scott, when you think about where some of the other trades are laying today, bonds firming up, dollar down, crude stands out to me as a bounce there. WTI up 3%. I'm not sure if that's I know people will argue energy is like a political thing, but right. The chart has been so uniquely sort of agnostic to that stuff and just range bound and seemingly supply driven in my mind.
Yeah, I think we have to be careful of any rally here. Whether it's on the delay that we saw of production, or whether it's on the rhetoric that Iran is imminently going to attack Israel. I think we have to be careful of any rally. I am still in fade the rally camp. Not yet here, just because we're up a couple bucks, trading over 71 today. I don't want to fade it quite yet, but this market sure has been a fade the rally rather than a buy the dip market in crude.
Any clear reason why it would change? Is crude just fade every rally, dead money right now, or what do you think?
I don't believe it's going to change until the narrative changes about supply and demand. We've got an oversupply and very little demand, especially when you see what's happening out in China. So until the fundamentals change, sure, you can get a shock to the system based on geopolitical events or something else, but I don't see that fundamental narrative changing anytime soon.
Okay. There was some action for natty gas today, up 4.5%, but it seems part of the same sort of range-bound conversation. To shift it over for a sec, Scott, because I know you got range. Talk to me about gold for a sec. We haven't talked about it much today. Took a little bit of a backseat Thursday, Friday last week after obviously an incredible run.
It's about the only time it's taken a backseat over the last 9 months or so. And as we've discussed, Oliver, gold to me has been a buy the dip, completely opposite of what we've seen in crude. It's been a buy the dip and it's worked for a very long time. I do think we will grind higher. And I also think that, come tomorrow night, come Wednesday, if it's clear that we don't have a decisive winner, at least for a few days, maybe a week or so, I think you're going to see gold rip to the upside.
All right, nice. Juicy, love it. Okay, thanks, Scott. Appreciate the thoughts.
You got it.
Always a good walk through the market action. Scott Bauer, CEO of Prosper Trading Academy.